And welcome in, fine friends, to Ring the Bell Investing with the Masters of Marketocracy. I'm Dan Leach. Always a pleasure to be here. And let's bring in the man that needs no introduction, the king of the world himself. It is the CEO and the CIO of Marketocracy Masters, the great Toad Squatch, Tony Mitchell. Tony, how you doing, buddy?
Hey, I'm good. Thank you, Dan. Good to be here. Good to have you back hosting our podcast again. Thank you.
I think you should just say I'm very honored. I'm just kidding. I'm not that big of a deal. No, we had a great show last time. Your first ever live show. We're doing it again 4 days before my birthday, so it's a very emotional month and night for me. And it's also emotional for me to welcome in a guy that last time I believe was doing the Iditarod in Alaska, so he couldn't make it. But it's Kyle Harden. Great to have him. Kyle, of course, a master portfolio manager with Marketocracy Masters as well. Kyle, you missed all the fun last time.
I did, but I was able to listen in later, and I really enjoyed the podcast, and excited to be here this time.
Well, it's great to have you. That's a very emotional fan you have behind you. I feel like I kind of want to jump out and just get that. By the way, for people that are watching, they might be obviously anywhere in the country or world, but I know Tony and I are here in Michigan. Kyle, you're here in Michigan too, right?
No, I'm actually in Dallas, Texas right now. So it's like 90 plus degrees. So
yes.
Hence the fan is cranking.
So we've had 2 weeks of 40 degrees. And on my birthday, it is going to be 83 degrees on Tuesday. So it's been, at night we've had frost warnings in May, which is nuts, but it's about to get crazy pants. Much like this guy, just kidding, he's the best. It is Glenn Braunworth, the CTO of Marketocracy Masters and a Master PM as well. Glenn, great to see you again.
Good to see you guys. Is my background correct here, or is it
Your background is awfully great. And Kyle doesn't have a background because all he needs is a fan to make everyone realize how great he is. It's all good. Listen, let's get into it because there's a lot to discuss, much like there was last month. And you're going to be seeing, if you're watching this, obviously, messages rolling across the screen about ways to get involved, how to get to the newsletter, the website, obviously, marketocracy.io. And Marketocracy Masters are the websites. We'll talk later about the virtual portfolio contest, which is coming up soon as well. If you're listening, just make sure you go to marketocracymasters.com. And Tony, do you want them to go to marketocracy.io as well if they don't see it on the screen, if they're just listening to this version of the show?
Right. Marketocracy.io. They can get the sign up for the newsletters, get the current editions of the newsletters, watch the latest podcast, get other investing information. And Marketocracy Masters talks more about our model portfolios and ways to invest behind the masters.
And I believe there is a link on there to get to my Amazon wish list for birthday presents, right? So make sure people can do that as well. Let's lead off with this, guys. And listen, the initial honeymoon phase of AI is over. And we talked a little about this last month about how.
Sorry about that.
What's going on there? Are you interrupting the show? What happened? Do we lose Kyle?
I think Glenn froze and we lost Kyle.
Oh, Kyle's back.
There we go.
I am back.
Glenn is back somehow and not back in another
There
way.
he is.
There he is. There's Glenn. All right, let's get to business, friends. But listen, we talked a little about AI, how crazy it is. There's been so much that has come out in recent months, recent days about AI, both good and bad. But today the biggest question isn't really who is buying the chips, but who is actually making money from using them. And we kind of alluded to this last, show about how there's all these companies. Obviously, NVIDIA is kind of the ruler of the universe, but there's so many chip companies and AI companies that aren't making any profit, but they're worth so much money because it's kind of like the dot-com bubble burst. And there's all these different parts of that. But, is the massive CapEx spend, which is obviously trillions globally right now, actually expanding operating margins, or is it just, quote, table stakes, if you will, to stay competitive? And I know earlier today, Cisco Systems rallied up 15% after reporting really voracious demand for AI infrastructure. The big question is, and Tony, I know I threw a lot out there for you, but can it continue? And is it just kind of going to spiral out of control with kind of what I mentioned, that there's companies that are obviously worth lots of money on paper, but not making any profits, and AI is the future. It's the present. It's not the future. It's the present.
Dan, actually, it's a great question for today because there was a new company IPO'd today, Cerberus Systems, and their stock went off the charts today. And their company, they build these great AI chips. They're mega huge, but they're mega fast and mega expensive. And listening to analysts talk about it, reading up some more about it. To me, that's one you have to be careful about. I think a lot of people will get stuck holding the bag on this one, even though in the after hours, it's up even a little bit more again, another 6% after hours. But there are other companies that I do think will continue. You mentioned Cisco. And I think if it wasn't for this IPO, Cisco would have ran even further today. I mean, it already had its best day in years. But I think that we'll see Cisco continue to go because they're the backbone of a lot of the networking needed for the IA. So, yeah, I do think some of it will go. You just have to be selective.
Wild times we live in. Kyle, your thoughts? I mean, AI is, like I said, it's not the future, it's the present. I mean, there's obviously a future in AI as it continues to get bigger and bigger and unfortunately take a lot of jobs from people, but also add more jobs and make jobs more efficient. Where are you at with everything when it comes to AI right now?
Yeah, no, absolutely. I mean, you're correct on all the points. So AI, I mean, if you look back at the internet, right? When the internet first started, there was certainly a bubble, right? There was a lot of activity, there was a lot of attention, and there was an internet option for everything. And then of course the bubble burst, but guess what happened, right? Everything kind of recalibrated. And now the internet, I mean, we live, everything we do is on the internet. We're right now broadcasting on the internet. And AI is going to be the same way, right? Currently it is obviously in the present, but it's going to continue to grow throughout the future. As demand increases, we can't have self-driving cars and all of these capabilities without expanding compute, without expanding memory, without expanding energy. And with all the projections right now, if we don't expand those things, so going back to your question about the infrastructure absolutely has to be built out. There's only so much you can do from an efficiency standpoint. And over time, these models will get more efficient. But in the meantime, we will have to expand all the infrastructure. So from that perspective, it is table stakes because those who don't expand the infrastructure and make the investment now will be left behind and will be forced to buy from those who do. So that build out, it certainly needs to take place, and we will, get those gains, 5-7 years down the road from those companies that are spending massive billions of dollars in CapEx right now.
Perfectly said. And I love whenever we can sneak in poker terms like table stakes into any kind of discussion. Glenn, can the demand keep up?
Yeah. And this deal actually shows that I think Cerberus made a deal with NVIDIA. So what they do is when you have a wafer, you usually slice it into a whole bunch of chips. What Cerberus does is they just take the whole wafer and make one gigantic single chip out of this thing. And so instead of having 100 billion transistors on one chip, put together, say, with an NVIDIA backend, right? You'd have one chip that has 2 trillion transistors on it, and all the memory and everything else is actually a one huge wafer. And so, each chip, they all kind of do different things. They have different pros and cons to them. Like you need a huge machine to put this gigantic wafer in. It's not like a little card you put into a normal server. You have this giant machine that they've been building with NVIDIA to put this huge wafer. I mean, it's the size of like a pizza. It's this big, right? But it's one big chip. And I think even NVIDIA is just, like they said, covering their bets based on whether it's a gigantic, wafer or a wafer scale chip or a little teeny smaller chips like on the edge. That's the next thing where you're going to have AI in your phone, in your home router, like with Cisco, right? A lot of the AI hardware is actually being integrated into the network, pieces like that. So it's going to be through the entire value chain, from, your toaster oven could theoretically, if it has an IP address, could be part of the AI infrastructure.
My toaster could kill them. I'm just kidding. It won't be that.
It'll burn your toast, if it gets the wrong programming instructions or AI prompt.
Great stuff, Glenn. You know what I think is also fascinating, and you guys understand this, and I'm sure a lot of people watching this do too. You mentioned the wafer type chips and the size of them, even if it's the size of a building. These phones that we have now in the 50s were the size of a warehouse. Like the information and chips in this phone used to take warehouses to put together, and it's getting, the expansion is just, it's mind-boggling. It's like the amount of progress we have made in the last 100 years compared to the last 100,000 years. And it's getting faster and faster and faster, which is both a good and bad thing, but it's good for investing because obviously, as you mentioned, demand and all the different things that AI is, capable of. Before we get into some interesting stuff about retail sales that came out this morning, Tony, I wanted to go back to you for a second. Many people watching this or listening to this are familiar with Marketocracy Masters, but I know we have a lot of new people. I wanted you just to briefly let everyone know what you, the great Glenn and Kyle, are all about, because I'm sure people are enjoying the information they're getting, but they want to know, what are these king of marketing masters? So let everyone know what you guys are all about and why this is such a cool thing that you guys are doing and why I'm so honored to be involved.
So thank you, Dan. We're here to democratize investing for everyone. We all got involved because of a contest we joined 20 plus years ago to see how we would do against the top money managers on Wall Street. And we all ranked amongst the top, if not outdid those money managers. And through that, we were made master portfolio managers with the great late Ken Cam in the original Marketocracy. Unfortunately, Ken's passed on now. And so we recreated the company to continue on this tradition of looking for the next great portfolio managers. And that's going to happen with our virtual portfolio contest that we're just getting ready to kick off and launch in the next 30 days or so. And then we also manage capital. Anybody can invest money behind our models and other house models that we've set up so that we're putting people in the right investments for their needs and their risk profiles at low fees, low minimums. And again, it's about democratizing investing. We're not like that one famous company that says, hey, if you got $1 million, we'll help you out. We're here to help everybody.
You're for the people. It's all about the people. It's
That's
not about
right.
letting them eat cake. It's about letting them make profits and reap them. All right. I love it. Great stuff, Tony. And also all the information, marketocracy.io. It's Market, OCRACY, if you're not watching the live or the replay video version of this show. All right. Let's talk about those retail sales. And I'll go to you first here, Kyle. This, earlier today, we're doing this show on a Thursday on May 14th. The retail sales up plus 0.5%, suggesting the consumer is, hanging in there, if you will. But there's obviously incredibly elevated energy prices that have really pushed the April CPI to 3.8%. So inflation, of course, running a little bit hotter than expected with the CPI and the PPI, which is exceeding expectations the last week. Do you think that we should be concerned with inflation hurting the markets right now, Kyle?
Yeah, absolutely. Because what happens when gas prices rise is inflation hits us differently in different places, right? So immediately, of course, you feel it at the pump. You will feel it in airline prices, right? Because those things are priced on gas prices immediately. So as soon as oil jumps up, you see the gas price jump up. But you have longer legs for different things that you get from the marketplace, right? So things that need to come to the market, if they're produce and things like that, as they're using gas, it starts to price up quickly. But when you start to look at things like manufacturing has a longer leg, right? Because now it has to be built out. It has to come to the market. You're looking at a car, pieces are all over the world and they're being distributed and brought to a centralized place as far as manufacturing. So you see the lag in those prices coming up. It could be 6 months, 8 months to a year based upon those higher, energy prices. And so we will continue to see higher prices hit the market, especially the longer that the gas prices remain high. And I expect them to remain high for quite some time, because even if the war ends tomorrow, there's been infrastructure that's been damaged. There's a supply
chain
crunch. Yes, I mean, it's going to take time, right? So even if we ended the war, it's going to take time for those gas prices to drop. Yeah, we may see a quick drop, right? Because there's happiness, and hey, just like we've seen with the peace deals that last a few days, the price may drop a bit, but it's going to take a while to get back to $2 gas prices, depending upon where you live, right? But those prices are going to impact all of the goods that we have, and we're going to feel that as consumers for quite some time.
Yeah, we don't get political on the show. We keep it straight to just making money, but you're hearing a lot of stuff from the White House and other politicians saying, "Oh yeah, as soon as the war or the excursion, whatever, is over, prices will drop." Like that's not the case. It doesn't work that way. Much like how most presidents aren't, it's not their situation or responsible for gas prices. This time it's a little different. So there's a lot of very interesting things going on. And going over to you, Glenn, when it comes to this. When we just look at just the rising inflation and all the stuff that Kyle kind of alluded to, it just seems like kind of a mess right now.
Yeah. I mean, it just shows how interconnected the entire global economy is. No one country is actually independent in what they can do. You know, we need certain chemicals from this country or certain minerals from that country, and every other country needs that too. So, you know, it just goes to show that any disruption actually affects a lot of people. I saw one article with it's a Japanese candy company, and they can't make their candy packaging with color anymore because they need naphtha. Naphtha is a chemical from oil that you use to actually make ink. If you don't have that, and you can't make plastic without naphtha. So one thing gets bottlenecked, and everything else throughout the entire supply chain, regardless of what country you're in, you have to buy from somewhere else. And that little area there just shows how much of an economic pipeline that area is right there. That so much, regardless of what country you're in, everything is affected because we might import finished products from other country. Maybe you imported the ink from another country and we might print it here, but they still needed to have the naphtha in that country. Right. So, you know, back to the consumer is going to have to buy toothpaste and tube socks and, you know, breakfast cereal. They're going to buy it either way, but the box will be black and white instead of with color, you know, or they'll actually change that kind of part of actually how marketing ought to be, because they're going to have to start removing some of these pieces out of their marketing campaigns because they can't actually print it anymore. And that's just from naphtha. That's one thing from oil that has an effect throughout every other product. If you make any product that has ink on the packaging, it's affecting you and through the entire supply chain. And that's just one piece.
Fertilizer, you know, too, is obviously a big one that is going to affect the prices of food. I mean, it really is. We're obviously not in COVID unless people believe the hantavirus is going to become COVID, which it doesn't seem like it has a chance of doing. But we're in this period where one thing affects the other, affects the other, affects the other. It's like this whole snaking of a slinky dink that's worldwide. So it's really it's a very interesting time right now, and I know frustrating for many. Tony, I want to start with you on this. This is obviously huge news when it comes to Kevin Warsh finally now officially being confirmed as the next chair of the Fed Reserve. And, you know, listen, we know that he's on a mission to cut rates in the 30-year, just top 5%. The big question is, as we call it, the $64,000 question with inflation, I guess $640,000 question is, will he be able to, or is it going to become a quagmire with how, you know, the Fed has been kind of put in the spotlight the last couple of years?
Yeah, I think that he was brought in for a purpose, and I think he's going to be on a mission, and he's going to do a few things a little differently, but I think you're going to see rate cuts. Maybe not right away, because he'll be taking over in short order here. I think actually tomorrow is the official day, but I think you'll see rate cuts. I think we'll still see a rate cut this year.
Yeah, it's I mean, it's at least he's in place, and there's not, because I mean, you know, the last couple of years with Jerome Powell and the threats and everything, it wasn't helping markets. Then they would get crazy, they would get settled, then think something would be said by President Trump. It was just kind of off the radar a lot of times. You know, Kyle, I wonder what your thoughts are when it comes to Kevin Warsh, and, you know, will the rates go up? I mean, can they feel good about that? Will he be able to do what as Tony mentioned, his mission is looking like it's supposed to be?
The pressure will certainly be on him to cut rates. I mean, we all saw what the pressure was on Jerome Powell. But with these numbers, right, typically with inflationary numbers going up, this is not a time where you would typically make rate cuts. So I certainly think it's going to be slow. I don't think he's going to come in and do anything immediate. You know, I think he's going to look at, I mean, probably the earliest we would see something would be probably late in the fall, you know, maybe towards getting towards the winter, once, you know, hopefully if the war can be ended and, you know, some of these things can start to cool down, then maybe we could get a rate cut, probably leading into midterms. I know we don't like to get political, but as midterms start to come into play, I think there's going to be a lot of levers that are going to be turned to try to change things around on Main Street, right? Wall Street's doing great, right? When the conversation we're talking about now is Main Street, and I think we may start to see some levers turned heading into midterms.
Yeah, someone a long time ago told me it's the economy, stupid. So we'll see how that all goes. Glenn, as Tony alluded to, Kevin Warsh on a mission. It's been a very interesting situation with the Fed the last couple of years to begin with. But, the president's got his guy in there. Will he be able to get the job done? That obviously the White House wants him to.
Well, the Federal Reserve was originally created to be independent of politics.
Yep.
Right. And with that in mind, you have a limited amount of room to lower the interest rate. You can't lower it too much because that actually causes stagflation. That actually has the opposite effect. It makes things overheat. But without oil working correctly through the Strait of Hormuz, and without the rest of the system working correctly, that interest rate cut will only have a limited effect. If the price of oil is going to go up, regardless of what that interest rate is, then he has limited tools at his disposal that he can actually make a difference. He can lower the interest rate. He can be a little bit more flexible with those things. But at a certain point, he can only put so much more money into the economy. If the rest of the world isn't functioning correctly, it's like you're spitting into the wind. So he can make a difference. It can have an effect. It'll help consumers to a point. It'll help the stock market. But when you go and your gasoline's $5 or $6 a gallon, people aren't really thinking about the federal funds rate.
No, and listen, we talked about this last month too, and you just mentioned it. I'm glad you did. The Fed is supposed to be independent. Not so much these days. It sure seems like, at least in time. So we'll see how that all plays out. And kind of taking that a step further, and something you just had mentioned too, Glenn, about people paying $5-6 in California or whatever it is for gas. Obviously, it's $4.50 to $5 here in Michigan, higher than it's been in a long, long time. Grocery prices, all the different things that we, as I mentioned, it's the economy, stupid. It's all about that as these midterms come up. There really does seem to continually be this massive disconnect between the stock market, which of course continues to break records. And I can't remember maybe you guys can help me. I think, what is it? 30-40% of Americans have money in the stock market. I know it's obviously not the majority, but there's obviously people making money, but then the average household is in a record low sentiment. I mean, the big question is, and I'll go to you, Tony, first here. How long can retail spending continue to remain positive when these gasoline prices, the grocery prices, you're flying on an airplane now because Spirit's gone, so everyone's raising their rates, and fuel is obviously costing these airlines a lot of money, are eating such a large share of this, quote, caloric intake, if you will, of the household budget. I mean, it really is a very tough time for a lot of people right now, Tony.
Yeah, no doubt. And to the point of the bipolarization too, I mean, we just hit a new all-time high in the S&P, first time 7,500 today. So,
which is insane to me because everything keeps going up, but most of the people, their worth is going down.
Yeah, and gas is a tough one because everybody needs gas to get around, unless you're taking the bus, which you probably aren't making that much money anyways, if that's the case. But, I think on the other end, though, I think that there are ways to work around it. There's a lot of deals out there. Yes, grocery prices are up, but there's a lot of variety in prices. There's a lot of variation in prices. And so it's about clipping those coupons, shopping a little bit smarter, cutting a few corners. And that's what the Americans are going to do. Gas is harder to get around. It might hurt the vacationers and the leisure travel. But I think that in the end, we're going to be okay. And I think that this is all going to work out because I still believe that because of COVID, we saw greater increases in wages in the last 5-year period than we have in probably the last 20. And I think that that's somewhat balancing things out because I think more people do have more disposable income. And right now they might be hurting a little bit with those gas prices. But, when wages went up, rents and house payments didn't go up because people are established. So I think everybody felt a little bit more cushion in their monthly budgets, or most people at least. I can't say everybody, and I think we're going to be okay because of that.
No, you made some great points there. And speaking of shopping smarter, I mean, my dad's a little older, and I've told him, not that we should be eating a lot of fast food anyway. It's not very. I know that Tony, you won't, because I believe that you eat as clean as anyone I've ever heard. You eat as clean as a machine. But, go on the apps for, whatever the fast food place or restaurant you like. And most times they have coupons and you can save money that way. You can clip coupons in the I mean, I know it's for some people, they probably never have done that before, but there's no reason not to. I mean, I save thousands a year doing that. And it's pretty simple, especially with this advanced technological age we're living in now with smartphones, where you can just go on your phone, download an app, save some money. So it's something that I think a lot of behaviors are going to need to be changed by people that aren't used to changing them, but also the broader scope of things. Obviously, it's tough for a lot of people, so they got to be smarter about it. And Kyle, I'll go to you when it comes to where we're at with just this record stock market. Money that people, there's a lot of people making money on that, and there's people that are in the market. We get that, but the majority of the country is not. And I just wonder if you see this continuing to go, or if, speaking of midterms once again, because I know the president, and a lot of presidents talk about the stock market. If it's good, it makes them look good. What if the stock market tanks on top of all the other things? That could make for a very interesting midterms. That's for sure.
Yeah, no, absolutely. And to Tony's point, just to touch on Main Street really quick, I think Main Street is resilient, right? So like Tony was saying, I think people are gonna figure it out, right? They're gonna figure out how to manage their budgets. They're gonna change some behaviors, and over time things will start to rebound. But for Wall Street, as Tony alluded to, we do have record highs for a number of companies out there, right? The market overall, but also a number of companies are in price discovery. We're looking at Nvidia, shares, $230 a share, and moving on. And so I think Wall Street will continue to grow. I mean, if you look at the trip to China, this wasn't just a political trip, right? It wasn't just politicians that went. It was 20 plus CEOs.
Fortune 500
right?
company CEOs.
Yeah, this was a business trip. And in light of midterms coming, the way I see this year kind of playing out, I think is pretty much like what we saw with the election year. I think the stock market will continue to run through midterms, and then probably somewhere around mid-December, just like we saw in the election year, we saw a pullback as we got into the end of the year and then early into January. So I think the euphoria, I think we'll get all the way through midterms. And then I think we'll start to see a pullback. Now, of course, there's going to be some daily chop. You're going to see some stops. Some of these stocks, may drop, 5% in a given day or whatever, based upon, the news of the day. But I think overall, the market will trend up through midterms shortly thereafter. And then I think we'll get a pullback based on those midterm results as we start to, ease into January.
No, we sure will. And speaking about front and center on that China trip, Jensen Huang, the CEO of NVIDIA. I mean, they talked about him more on the news than they did about pretty much anyone else, aside from the two presidents.
They made a special trip to pick him up, right? He was in Alaska, right?
Yeah.
They made sure he made the trip, right? Which is huge for NVIDIA, because we all know they lost a ton of money in market share in China, right? By the legislation there. So big opportunity there.
Glenn, to you as well on this question of records in the market, but people hurting around the country, but also other fundamentals looking good, some looking bad. It's just this crazy mix that we're in right now.
Well, in reference to the NVIDIA thing, it's like AI is such a powerful thing, but the GPUs they couldn't actually sell or weren't allowed to sell to China. I'm sure there was some company out there that would have picked them up.
Oh,
right?
yeah, for sure.
Right? And it's like, that was just extra. That was like more gravy on top of it. So somebody would buy those GPUs, because my understanding is most of these companies can't produce fast enough because they're scaling out with these centers, right? Now that'll fade all in a couple of years maybe and plateau once there's enough. But I do believe that these systems do have an effect. I mean, 3-4 years ago, it was a little bit more mediocre, but if you played around with Gemini or some of these other tools like Claude, they actually start doing amazing things when you play around with them. So I think that's definitely going to have, an effect. But in reference to the elections, I don't know. Like you said, the stock market is not everybody, but everybody eats. Everybody buys gas for the most part, unless they're riding public transit, But even public transit, they run on diesel. You know, so if you're running the bus, you got to pay for diesel, or for the trains, you got to buy diesel. And, the paradox of all this is that it's pushing more people towards green energy than before, but, I still think gasoline, that always seems to be the one trigger point when it comes to elections. Like we'll deal with a whole bunch of other things, but when gasoline gets out of control, people just like lose their minds, you know? And it's just something that we don't have a lot of control over because we have a weird oil system, right? We drill what's called sweet crude in the United States and we export it. And then we import sour crude, which we can refine and turn that into gasoline. So we don't even refine the gasoline here that we make. We import the oil, we refine that, and then export our oil out of the country. It's really a bizarre system.
And just people know that you can't eat the sweet crude and not eat the sour crude. It's either of them are good.
Yep.
Guys, this is. Oh, I'm sorry. Go ahead.
No, it just shows that like even though the Strait of Hormuz and a lot of those countries deal with that oil there, we are still affected by it. You know, we were buying Russian oil before the war started, 3 million barrels a day.
Yep.
So the oil companies, the way the markets work, they're buying from everybody all the time and moving it around. And that's the way they like it. It's very fluid. So this is affecting them. They're making a lot of money, but it's also affecting them too.
I'm sure many have heard the term, trickle-down economy. The oil situation is a trickle-down situation as well in many, many different ways. All right, guys, great stuff so far. Before we get into one of my favorite parts of the show where you guys let everyone know if you're buying anything right now and what that is, Tony, back to you. I want to give you a chance to talk about this incredible virtual portfolio contest, which I have already won. People just don't know it. How do people get involved? Let everyone know about it because this is kind of how you guys started this legendary group, Marketocracy Masters, and now we're looking for the next ones.
Yes, thank you, Dan. So interesting. You're the second person that told me you won. So
yeah, but I'm the first one that actually really did.
It's we hope to have a lot of winners out of it. And interestingly, in a recent book that came out from National Public Radio, Planet Money, which the author wrote a chapter about Marketocracy and myself. He compared another contest that did not have a lot of winners, and he felt like the average person wouldn't do good at picking stocks to beat the S&P. We believe that's not the case. That's why we're starting the contest up again. So we hope we get a lot of participation. You can go to marketocracy.io to sign up. We're going to be kicking that off hopefully on June 1st. We've been doing a lot of work making sure this platform is ready to go. It's a brand new platform built from scratch to do this contest. So please sign up and we'll send you information as soon as it's ready to go. We're beta testing it right now. And we look to have a lot of spin-off competitions out of it in the future.
Great stuff, Tony. And I love that you're beta testing, even though you're a total alpha. See, I got jokes. All right, let's do what I love. One of my favorite parts of the show where you guys, actually let the people know. And there might be weeks where you're not necessarily, shows you're not necessarily buying stuff, but most of the time I'm sure there's something out there that you guys like. Glenn, I'll go to you first here. Are you buying right now? What is it if you are and why? Glenn?
Oh, sorry.
Pay attention. I'm just kidding.
I know. I thought you said Kyle. Right now, I'm actually having my eye on Intel. It started to move amazingly in the last 6 months when it hasn't had a new daily high since I think it was March of the year 2000. And as you mentioned earlier on in the show that, there are other companies that are not just NVIDIA that sell a lot of the hardware that go into these data centers. You need the whole computer. It's not just the GPU. You need the CPU. You need the hard drive. You need the memory. So I think Intel might actually be starting to get a little bit of traction, even though their intrinsic value is somewhere between $20 and $30 a share. But still, I think they might have a way to run here because everybody needs to put CPUs into those data centers right now. And right now, I think they just hit about 130 a share, give or take. I haven't checked today. But basically, that's the one company that seems to be – it's trailing some of the other hardware companies. So that could potentially mean there's a lot more headroom in Intel at this point.
Yeah, Intel obviously always I remember, as I've covered the markets for the last several years for the various, media companies I've worked for, a lot of people are always talking about Intel. There's a lot of value there. It's run well, and it's definitely something that you can have for the long run. So that's a great one. And I put it up there just so if people didn't see it or are listening, it's NASDAQ symbol is INTC. So take a look at that. Kyle, let's go to you. Are you buying anything? If so, what is it?
Yeah, so there's a stock I called back in February, which is Coinbase. And the reason why I'm looking at Coinbase, which when I called it back in February, it was $150 or so a share. As of today, the intraday price got all as high as 221. It settled, I think, at around 212. Its 52-week high was up at $444, right? So I'm looking at, what's that margin? Where can these stocks get to? And I look at a lot of the other companies that I'm invested in. A lot of them are actually in price discovery. I'm a big holder of NVIDIA, right? And they're at pretty much all-time highs. And you don't really want to chase companies that are in price discovery because they're more likely to go down than they are to continue to go up, or at least go up significantly, especially when they have very high market caps. When you look at Coinbase, right? So we know the price of Bitcoin has fallen, which of course it is price sensitive to Bitcoin as well as the overall crypto market, but also the Clarity Act is something that's driving its price. And the Clarity Act actually came out of a Senate subcommittee, the banking subcommittee today, and it was passed to move forward to the broader Senate as a bipartisan vote. Still has some work to do to get full Senate approval as well as full approval across Congress. But this is something that's going to help drive Coinbase as well as the broader crypto market forward. There's a lot of optimism that it will pass. It's kind of cautiously optimistic, but that's pretty much what the thesis is here. Is if it continues to go forward and get passed, it's going to create clarity in the crypto market, which is going to allow Coinbase to really, as one of the largest, especially in the United States, financial providers of crypto, to really be able to take advantage of that. And there's several things there that will really enable the business of Coinbase to really be able to really excel as far as finally having the approvals and the governance to know how to manage their models moving forward. And so I really look for Coinbase to be able to rebound and get closer to their all-time high as we progress throughout this year, which I think will drive the broader Bitcoin price up as well.
Sure. And I've had a Coinbase account myself for a long, long time. And you think about how easy it is now to trade crypto on all these different, apps, and it's only going to get bigger and more accessible around the globe. So I know Coinbase is a favorite of many people's. Tony, let's go to you, and I'll let you give that market disclaimer statement that you'll have to give.
Yeah, thanks, Dan. And, I like to look for things that are out of favor, but I see the value and I see the long term. Because I think you have to get in when things are a little bit out of favor so that you get that upside in the big run. And right now, the financials have been out of favor. So I'm looking at Schwab. Schwab's pulled back quite a bit. They bought TD Ameritrade in the last couple of years, and I think they're one of the best out there. They're earning $5.04 a share. They're trading at about a 17 PE, and they pay a small dividend. It's not much, but a 1.4% dividend. I think it has more upside, and I think we'll see this one bouncing back.
And that is SCHW on the New York Stock Exchange. That's Tony's stock look at once again. Glenn went with Intel, NASDAQ symbol INTC. Kyle went with Coinbase. The NASDAQ ticker is COIN. And Tony, I mentioned, don't we have to have that special statement?
Thank you, Dan. And to your point, I'm glad you reminded us about that.
That's why I'm the best, and I'm very humble.
Hey, we're here to provide investing in intelligence and information, but none of this is specific to any one investor because everybody's risk tolerance is different. And we have a risk assessment tool on the website that anybody can go on. And our assessment tool will help people decide what kind of portfolio they might want to build. So what the stocks we talk about aren't right for everybody, but there's some things that we like. We're just trying to provide some information.
Thank you for that. Like I said, this is for the people, by the people, and for every people. If you're listening or watching the show, obviously you can see the information scrolling across. But if you're listening, don't forget Marketocracy.io, as well as Marketocracymasters.com. And don't forget the upcoming. Do we have a date on this yet, or are we still kind of
targeting June 1st? We're targeting
June 1st. So that means about 17 days away. Get your research started. I'm sure many of you have been researching anyway. But get all the information about the great virtual portfolio contest at Marketocracy.io. You guys were incredible as always. Kyle, I know you weren't here last time. You missed the fun, but you were right in the knee deep of the hoopla fun this time. Before we get out of here, and I want to thank all of you for being on, and of course, thank everyone for watching or listening. I want to give you each a chance for any final thoughts. Kyle, we'll start with you.
Yeah, no, I mean, this is a fun time to be in the market, right? I mean, this is what we're here for. You look at the excitement in today and watching the markets, and also when there's turbulent times, right? And one thing that we're seeing is we see big swings based upon the news of the day. And I think this is the time to have conversations, to listen or be a part of podcasts like this. I think these are the opportunities when you can make significant changes in your wealth. So I think this is really the time for people to be taking a look and reviewing how they're investing, what their strategies are, and figuring out what the best path is for them forward. So I really appreciate, and I enjoy listening to the guys here, right? And hearing their perspectives. We have all very different perspectives. And Tony talked about risk tolerances. And I think we learn from one another on this call as well. So I really appreciate being a part of a podcast like this and being able to share the information with everybody as well.
3 sets of eyes, 3 sets of lips, always better than one. So great stuff, Kyle. An asset to the show today. Please don't miss any future ones. I'll be very sad.
Absolutely.
Great stuff. Glenn Geary, Glenn Ross, final thoughts.
Yeah. Have faith in America, invest in America, right? And, our stock market and our financial markets, when run well and are clearly transparent, we outperform everybody in the world. So I guess have faith in the system. And past returns are no guarantee of future performance.
That's true. Amen, Glenn. Amen.
Glenn, we do have some great returns, which you can see on the site, right? So we have some great reports that show
we're the outperformers, though.
Yes. You guys are masters for a reason. Let's go to the great CEO and CIO. He's so cool. He's got 2 titles. Toad Squatch, Tony Mitchell.
Hey, I like what Kyle said, and I agree. This is an exciting time to be in the market, but I want to just share also some words of caution, because you do have to be selective and careful. There are a lot of stocks that have run like crazy, so you just can't jump in on anything. And all of us at Marketocracy became great investors because we're long-term thinkers and we invest for the long term. It's not easy to jump in, make some money, and jump out. And it's very tempting to do that, but think long term. Thank you.
Great stuff by all of you. A true pleasure again. Looking forward to our next show. And for Tony Mitchell, Glenn Bronworth, and Kyle Harden, I'm Dan Leach saying thanks so much for watching and listening to Welcome to Ring the Bell, Investing with Masters of Marketocracy. Don't forget to go to marketocracy.io and marketocracymasters.com. Check out that virtual portfolio contest. The start date looks like June 1st, so get involved with that. Will be a lot of fun. Until next time, keep your feet on the ground, keep reaching for the stars, and believe in the dream. I'm Dan Leach, for all those great folks saying thanks so much for watching Ring the Bell Investing with Masters of Marketocracy. Until next time, we'll see you then. Peace.
Thank you, Dan.
Thank you, Dan.